Okay.
210 shares.
Okay. Tell us more.
At 746.
Okay. And when did you purchase these 210
When
shares?
in December onwards, I got it. It was around 800 and all.
Okay.
Then slowly, I averaged it to 746 now.
Okay.
So now I want to know whether to hold it or sell it.
Okay. Okay. And do you want to hold on to this for a long time or a short time?
I'm thinking of holding for a long time.
Okay. Okay. Understood.
Yes, I want to know that.
Good, good. Let's get our viewers, let's get our experts' view on TTK Prestige. So Vasudev from Bangalore, he holds 210 shares of TTK Prestige at 746 rupees a piece, and he started buying these shares in December, and that's exactly when the share price started falling and started correcting, in fact. Prashant, I'd like to get your view on TTK Prestige. Do you think Vasudev should exit these shares because he's sitting on a loss from this investment? Or do you think an up move will happen with regards to TTK Prestige anytime soon?
Not in the near term. Again, I think next 2 to 3 months will be a check and wait for the stock with respect to its Q4 earnings. There may be some kind of very flat to negative earnings show in the Q4 that can bring the stock below its again 550, 560 levels. So I think one should wait and watch for a good downside and then accumulate more. Fundamentally, very strong company in terms of the growth ratios as well as the return ratios. So overall, very positive on the stock on a fundamental basis. But near term, there may be some kind of pressure, at least 50, 60 rupees here and there because of the Q4 earnings. Once the Q4 earnings is very clear, then I think we can have a very good long-term outlook.
All right. Thanks for that view, Prashant. With that, let's go across to a caller who's joining us from Chennai. Hi, Anindya. Good evening.
Hi, very good evening. Thanks for this opportunity.
Yes.
Well, my query is on a long-term basis.
Okay.
I'm holding PNB shares for almost now three and a half years now. I wish to hold it for another 2 years.
Okay.
So I would like to understand whether the holding period is right, and also what is our expert view on the asset quality?
All right. So a fundamental view on Punjab National Bank, and as Anindya rightly said, that he has been holding it for 3 years now, and he's sitting on a profit of almost over 73,000 there. So Prashant, coming to you, talking about the fundamentals of the company, Anindya has made some good profits there. So do you advise him to, stay invested in it for another 2 years, or should he be booking his profits?
I am very positive on the PSU banking sector. I think the next 1 year time period will have a lot of credit growth expected due to the RBI being pushing a lot of liquidity in the system. So I think the top 3 banks, SBI, Bank of Baroda and Punjab National Bank. So I think these 3 banks will do good in terms of credit growth, and their NPS is also under control. So I think fundamentally things are very much stable with respect to price to book earning, price to book valuation. It is below 1%. Again, I think 1 time. So I think that would be also a good way to see the as a banking stock. So overall, hold. Accumulate if the stock goes down by again another 7 to 8 rupees. I think 85, 82 rupees would be a good level to buy more this stock and hold it for long term. Overall, very much positive.
All right, 80 to 85, levels to buy more. Sarvendra, talking about the charts. So how is it faring on the charts? And do you also suggest the same thing that, for new investors who want to invest in the banking space and they want to start with Punjab National Bank, let's say. So what levels do you suggest, for them to buy and accumulate more?
See, if you ask me on the PSU banking space, my preference will always be SBI out of these 3 names, because that's the more liquid one, that is making the more stronger patterns, and that setup is looking the best out of the lot, because I will give him a data point now that might surprise him. But on the NSE data, what I get from my vendors, the PNB high was 2010. PNB high was 2010, and that was in the region of around 270, 280. So PNB is still far away from, has not participated in anything which has not made new highs in a bull market. From 2010 till 2024, we had a fantastic bull market. The quality, technical quality already becomes slightly weak and suspect, because you've not been able to participate for 14 years. There has to be an underlying reason. Yes, now those reasons are correcting and this will become an outperformer, fine. That's possible. But given a choice, I will still stick with the leader in the pack and try and trade that. But I'll also answer this query here. See, within a trade, if you're making money, you should be alert, and you should also be looking at overbought zones where you can take some profit. So he has missed the bus this time around because the stock went all the way till around 140, 145 and fell back towards 90. So almost 40% is what it shaved off from the high. He could have traded that stock, which means if he would have sold it slightly higher, and then probably 20% down the line, he would be asking to buy. So there's something called a trade within a trade. Within a longer term trade, if you've already had a long-term capital gains, which means you've had it for 12 months plus, you should always keep asking yourself, where in an overbought situation I can sell it and possibly catch it back 20-25% lower. That way, is the long-term returns that you're expecting on your portfolio can go many-fold higher. So buy and hold always sometimes is not the right strategy. 2 to 4 years you should be rebalancing always. That is what is evident from the Sensex data also. Every 2 to 4 years, Sensex corrects 25 to 30%. So if the index is correcting that much every 1 year, 2 years, your portfolio will also do slightly more, because portfolio will always remain slightly more high beta for clients compared to the index. So I think he's missed the bus this time. Now no point selling here, so he should hold 12-month plus horizon. Why not? You should hold. PSUs overall looking decent. So I would say the correction here, what I was expecting for the year is already over. So there's no more risk reward on the downside left, juice. You should be holding it for some more time now.
Right, Sarvendra, thank you so much for actually analyzing PNB, and not just PNB, but the banking space, and also giving in some information and suggestion, advices on how should you go about trading. I think that was a golden pool of information given by Sarvendra there. And let's talk to Nilay. He's waiting for us on the phone line. He's calling us from Patna. Hi Nilay, good evening, namaste.
I would like to give suggestion about SIS.
Okay.
Buyback has been announced yesterday at the rate of 404 rupees. I today bought at 330 rupees, 120 shares. At what level should I purchase more to maximize the profit?
Okay, and Nilay, did you purchase these shares yesterday? Did I hear you right?
No, today only I purchased.
Today, okay. And you want to be invested in SIS India for a long term or a short term?
No, only for buyback purpose, that's all.
Sorry?
Only for buyback purpose.
Okay. Understood. So, Sarvendra, I'd like to take your view. Nilay wants a short-term view on SIS India. This company is engaged in rendering security services across the board. Now, it hovers around 330 rupees. Nilay is asking whether he should hold or buy more units of his shares. He currently holds 120. Should he buy more to maximize his profits is the question.
I think, again, just now with the previous caller, we were discussing this. A stock which has not been performing in a bull market, inherently, technically, it's slightly weak. So it has to make double efforts, means it has to make doubly bullish patterns for you to get excited in the long term. But for this stock, I think I'm afraid I'll have to give him the information which he can himself see on charting packages or softwares. This stock is absolutely range bound. It's a large range, but it's absolutely range bound over the last now 6-7 years between approximately a 350 and a 550, give or take 20-30 points up and down. So right now it's at the lower end of the range, slightly lower end of the range. It's possibly broken the previous swing. So that number was around these areas only. So which we call technically a whipsaw. It's had some whipsaws on the 320, 330 mark. But right now, again, looking at the long-term picture, it's at the lower end of the risk reward. So if he has patience, then at these levels, he should be holding whatever he is holding. But I would not suggest him to buy again, because he already has this, and the stock is still not out of the woods. So it could still remain in that range. So nothing that it's going to be a trending stock, is no signal of a trending stock coming right now till here. Only still this range is huge, so he might end up making those 150, 200 points if he holds from here.
Okay, so Sarvendra, very quickly, you have established the fact that this is a range-bound stock. So for Nilay to be able to maximize his profits, when do you think he should sell these counters then?
You will have to stick to the long-term range that has been printed here. So it's been a 6-7 year long-term range. You have to stick to that range, and I would say that it will travel that journey again. Possibly it has done it 3 times up and down. So you will go with that faith that 330 is a good price area for the real long-term guys to kick in. The moves, when they unfold, they take another 1.5, 2 years. So I think with that sense, I think 540, 550 is what this should land up over the next 12, 24 months. As I said, from here, anybody thinking long-term, 12 months is not long-term. You have to think 24 plus, because markets still can spend more time around these areas. So you'll always have to think slightly longer, because the 16-year trend is getting over. So no longer 1 year is remaining long-term in that ratio. It becomes actually short-term. 2 years also is not that long-term, but at least it's patient enough for a long-term trend to emerge.
Thanks for that, Sarvendra, for that elaborate description there. And with that, we have a caller joining us from Chennai. Hi, Avdesh. Good evening.
Hello, ma'am. Good evening.
How can we help you, Avdesh, on the show?
Ma'am, I want some knowledge. I want to invest in waste handling stock and data center.
Okay.
For the long term.
Okay, so are you a regular investor, or you've just started your investing journey?
A regular investor.
Regular investor. Okay. And
I have searched some companies, but not confident on that.
Okay. And which companies have you narrowed down?
I have narrowed down Antony Waste Handling, Netwave for data center, Antony Waste Handling for waste handling, and Gravita India.
All right. So are you looking for a long-term view or a short-term view?
A long-term view, very, very long-term.
Very, very long-term. All right, Prashant, a very, very long-term view for waste management stock. But do you have any, top picks there in this particular space?
I think yes, industry is really lucrative. There are a lot of companies doing well. One stock which is I would recommend him is Enviro Infrastructure Management Company. So it is a company which was recently listed, I think 6 months or 8 months back. So the stock is really doing good. The fundamentals are very much strong with respect to ratios. Again, 40 plus ROC, 50 plus ROE, and 20 plus ROA. So I think these are the three conditions which I look in fundamental stocks. So this stock would be a buy for a water waste management company. Again, with respect to data center, again I think Anantraj is doing well. They are into real estate, but again invested a lot in the data center business model going forward. I think this is not be a right price, but I think wait and watch for a good level. Again, I think technical colleague can help me what would be the right price to buy Anantraj, but fundamentally very strong two stocks to buy.
Right, and Sarvendra, if you could just help, since Prashant, asked that what will be the current correct levels to buy Anantraj, and what are your picks, on the technical front?
See, these are all very high beta names. So these chop you both sides. So you have to, if you are trading something like this. So if I look at Anantraj from 950, we are back to almost 400. So almost 50% shave off in just 2 months. So such kind of high beta names, you have to be very, very alert. As I said just 2-3 callers back, that you have to be very, very aware of the overbought situations also. And when you are making money, you have to control your greed also. And you have to, if your targets have been met, if your investment targets have been met, and your whatever you expected of the market has been met, then the name does not matter. If your number has been made, you should also be booking out some profits, because as long as you don't book your profits, you don't get money in your bank account. Holding a paper asset is of no use if you don't book it on time. So I think these names will take time to recover. So these names, mid-cap names, especially the smaller names, will take some time to recover. Not very big market cap stocks. These still Anantraj is still, Gravita is still decent. But I would still believe that more downsides there. And I don't have a clear call on the sector, so I'll not, even though if I want to help, but currently I'm not in a position to give a clear-cut call on the space as a large. But the names that we discussed, I think still a lot of time-wise corrections still pending for all these names.
Right. And as you rightly mentioned, a lot of people tend to forget that, booking profits is very much a part of your investment journey. And with that note, we will have to slip into a short break, but keep sending in your queries on WhatsApp as well as call in. We will be right back for Ask Profit. Stay tuned to NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officer.
Welcome back. You're watching Ask Profit on NDTV Profit, and we are joined by Prashant Tapse on the fundamentals and Sarvendra Srivastav on the technicals. And viewers, just a quick reminder, please don't miss your chance to get all your stock-related queries answered. Pick up that phone and call us right away. Both the numbers are flashing on your screens. And with that, let's go across to a caller who's joining us from Hyderabad. Hi, Shrikant. Good evening.
Good evening, madam.
How can we help you, Shrikant?
I am your 2 lakhs investment, madam. Long-term recommendation stocks, madam. 10 years holding, madam. My children is gift.
You're looking for mid-cap and small-cap stock recommendations for 10 years.
Yes, madam.
Okay. And and any amount of corpus that, if you could tell us, that that you're planning to invest?
My children is gift, madam.
Okay, to gift your children. Oh, that's a very noble thing there. Okay, a very sweet query, I would say, on the show today. Prashant, what do you have to say? Any picks for 10 years that he would like to gift his children?
I think I will not recommend him to invest in stock market because there will be a lot of volatility going forward. As a long-term investor, I know he is very concerned and very conservative investor. So for him, I think mutual fund would be the right way to go ahead. I think a multi-asset class mutual fund scheme can be a good scheme for him to invest, where gold and equity or debt, this kind of mix can help him to make good long-term returns for his children. Because when you are placing something for your children, you cannot take a large risk in this market.
Right. Understood. And that's also a very, wise advice there, Prashant. Sarvendra, but, talking about the mid-cap and small-cap space, so do you have any recommendation otherwise, not particularly for Shrikant, but for the investors who are trying to invest, or who are planning to start their investment journey?
See, if you start your investment journey, it's always from the quality names. And if you want to leave for your children, you have to leave quality. Mid cap, small cap is again something difficult. It's a difficult game. It's a much more difficult game, and it's more high beta. So it's not for the starters. Yeah, once you have spent some time in the market, and then if you are able to mix up your portfolio with a good mix of large caps, mid caps, and small caps, then fine. But I think to attain that kind of understanding, he will take some more time. And when you are starting, as rightly said by my colleague, that you should be possibly starting with a multi-asset, and definitely you should have some gold there. If you want to leave it for your children, then definitely 40% of that should be gold, whatever your corpus.
Okay, so Shrikant, the suggestion for you is to perhaps invest in a mutual fund and give that to your kids instead of, investing in the stock markets at the moment. Let's go across to Anand. He's calling us from Chennai. Hi, Anand. Good evening.
Hi, good evening, madam.
Good evening.
I got a query on ONGC.
Okay.
I have taken 2,000 shares at a price of about 232 rupees. And I also want to know if I can add another 5,000 shares, and at what price I should add this 5,000 shares? Maybe on a little bit of dip, or should I wait, or can I buy it right now?
Okay, so you want to add another 5,000 shares, right, of ONGC?
It's a good dividend yield of about 5%.
Correct.
So, it's a little bit attractive, and also it's below its book value, and also there are, analyst targets of about 400 rupees. So I don't know whether I should add immediately or I should wait for some time.
Okay. So, let me just summarize your query. Anand from Chennai holds 2,000 shares of ONGC at 230 rupees a piece. He's sitting on a profit of close to 20,000 rupees already. He wants to add 5,000 more shares of ONGC to his portfolio, given the fact that it has healthy dividend yields, as well as analysts have targeted 400 rupees or thereabouts as a target price for this particular company. But Sarvendra, I'll take this query to you to just know whether this is the right time to add 5,000 shares. Should he go about it in a staggered manner? And just before that, for context, oil and gas was one of the top losing sectors in trade today. If we can pull up the sectoral heat map just to see how oil and gas was placed, and you would notice that among all the sectors that declined in trade today, oil and gas stood second as a second top loser. And plus, if you look at the oil and gas basket, and if you bring out all the components in that, you would see that ONGC was also one of the losers. And in fact, all the components in the oil and gas basket today declined in trade. And plus, ONGC particularly has seen cuts of close to 18% in the last 6 months already. Given all of this, Sarvendra, give us a view on ONGC. Is this the right time? Is ONGC trading at a discounted price? What is your analysis?
Yeah, I can discount it, not discount it. I would not be the best person. I think I will purely stick to technicals here. I would say that if his logic is only dividend yields, then there are far better companies giving almost double of what ONGC is giving in the oil and gas space. Now he has to go and find them for himself. There are companies which are giving more than 10% dividend yield. So that cannot always be the sole marker. Not that it is for many portfolios that can be the sole marker also, where you get good dividend yields and there's some chance of capital appreciation as well. So so that idea is not bad, but it can't be purely that idea for buying ONGC. And if he has that much of money, I think within the oil and gas space, why buy only one egg? You should not keep all your eggs in one basket. Sorry. So all eggs in one basket, I think, and that too in one sector. It's better that you diversify within the sector, and there are better dividend yields in that space in other companies. So you should kind of spread out and not buy one stock only unless until you have a very clear horizon. So I would like to ask him a question: why only ONGC and why such fixation for ONGC? Does he know something that possibly we don't know?
Right, all right. So question to a question. First time on the show today, but a very wise advice there that don't keep all your eggs in one basket and diversify your portfolio, even if you're investing in a particular space or sector. With that, Hari is joining us on the phone line from Hyderabad. Hi Hari, good evening.
Hello, good evening everyone.
Yes, how can we help you on the show today?
Hello, yeah. So I have a question on Aurobindo Pharma.
Okay.
I invested into Pharma with Aurobindo Pharma. I bought 50 shares at a staggered price of 1260. So what is the long-term outlook of this company, and can I average, can I buy more?
Okay, and when did you buy Aurobindo Pharma shares?
In the last 3 to 4 months, I bought it.
Okay, so it's a recent purchase.
It's a recent purchase.
Yeah.
I'm looking at a long-term view, 3 to 5 years, and can I buy more?
Okay. Prashant, pharma sector in particular is facing significant challenges amid proposed tariffs, by the US government. So what do you have to say on Aurobindo Pharma? Are you positive on this company, and should he be holding the shares in this space for another 2 to 3 years?
Yes, with respect to the stock, again, it's a third largest pharma company in India. You rightly pointed out with respect to Trump tariff, which will be directly impacting the pharma sector. If you analyze 2017-2020, pharma was the only sector which did not perform well, and against the Nifty that was falling down almost 20%. So a near-term outlook, at least for a quarter or two, there may be some kind of pressure in terms of business as well as with respect to outlook of the pharma sector. But obviously, being a second or third largest company in pharma, every dip, I think I would be recommending him to buy more. With at least 3 to 4 years view, obviously pharma will be the sector which will perform well despite having such kind of negativity in the near term. We are the world pharma manufacturing hub, so I think nobody can ignore India for pharma. So there can be some kind of near-term hurdles, but long-term very positive for the stock.
Okay, so near-term issues, but long-term positive. That's the view coming in on the pharma space. Let's talk to Sumit. He is joining us from Qatar. Hi, Sumit. Good evening. Sumit?
Good evening, ma'am. Thank you for taking my call.
Most welcome. What's your question today?
Ma'am, my question is that can I buy K Fintech at this rate for next 2 years? K Fintech.
Okay, got it. Prashant, what is your view on KFin Technologies? This is a financial services platform, but it has seen quite a move since December 2024. It has not been performing well. Do you think this is the right time to enter and make profits out of this investment?
Right time, I may not comment, but the stock is good with respect to fundamentals. But near term, Q4 earnings will not be so much good because it is indirectly related to capital markets. So I think whenever markets are in a weaker position, lot of new accounts, lot of new portfolios are not so good in terms of month-on-month growth. So Q4 earnings will be bad, so that will be reacted on the price. With respect to, if you see Q4 or Q3 earnings, even they were not so good, the margins were down. So I am expecting some kind of neutral to negative outlook for a very near term. But what price one should buy, I think the technical colleague can help him to understand.
All right. Thanks for that view, Prashant, on KFin Tech. With that, Keshav is joining us on the phone line from Coimbatore. Hi, Keshav. Good evening.
Hi. Good evening. Thanks for this call.
Yes. How can we help you on the show today?
Yeah. I am looking for I am having Adani Power around 501 shares.
Okay.
Average price is 502.62. So I'm planning to hold this stock until end of this year. Probably next 1 year as well.
Okay.
In the meantime, can I accumulate?
All right. Prashant, I'd come to you only. Talking about 1 year horizon, do you see the correct levels, to enter or accumulate more in Adani Power?
Yes, power as a sector, we are very much bullish. Again, with respect to valuations, Adani Power looks very attractive for me at this point of time when we compare this with Tata Power, Torrent Power or NTPC. So downside is limited with respect to valuations. Again, Q4 earnings as well as Q1 earnings will be better than expected. Obviously, power as a sector, there will be deficit in the summer times every time. So I think power will have a high demand and earnings will reflect very soon. So for 3 to 6 months, obviously, yes, we can accumulate anywhere between 480 and 470. And this price may not be a right price. Obviously, there will be some kind of profit booking in the very near term, I think at least for 1 week or 10 days. So that would be a good level to buy and hold it for 2 to 3 months. We can get a good profit out of that.
Okay, so accumulate between 480 and 470. NDTV is a subsidiary of AMG Media Networks viewers, which is an Adani Group company. Let's talk to Mahadev. He is joining us on the phone line from Chennai. Hi Mahadev, good evening.
Good evening, madam.
Good evening. How can we help you today?
Building material stocks, madam, and IT company stocks, madam. Mid cap stocks recommendations, madam. Long term for 5 years, madam.
Okay, long term, 5 years, mid cap, IT and building material. Have I gotten your keywords right?
Yes, madam.
Okay. Prashant and Sarvendra, we spoke about small and mid cap space just some time ago, and both of you said that our viewers should invest in mutual funds instead. And Mahadev has a similar query as well. So instead of asking you to suggest a mid cap or a small cap stock, I would like to know your view on building materials as well as IT. Prashant, why don't you take up IT and then I'll go to Sarvendra for building materials.
I think with respect to IT, again, near-term outlook would be some kind of blur until unless there is a clear picture of Trump action, which is due on April 2. But if you even consider again, so I think emphasis would be a stock which I am very much positive. Oracle will be a second stock where I am very much positive on the mid-cap IT space. These two stocks can do better. Downside is very limited from the current levels, but obviously I will be waiting for at least short term, for a good correction once the clarity comes from the Trump action. So these two stocks can be considered for him for long-term investments.
All right.
And let's also take Sarvendra's view on building material stocks. Sarvendra, do you identify any good company in that space?
Very few large caps in that space, first and foremost. And when I said that I said that large caps is a better way. If you're going direct, then large caps is always better when you are starting. And yes, mutual fund and gold also comes along. So a multi-asset mutual fund and gold. But anybody really wanting to do markets and doing it directly, I think large caps is the way to go when you start. Sadly here, for me, whenever I want to look at a sector, I need to have an index. So which sadly in this case is missing. So broadly on a sector theme, very, very difficult to say something on building materials. All the difficult questions for this evening are coming to me in the sense that where there are no indices, very difficult to take sectoral calls. On the Nifty IT, I'll put a red flag here. For me, I think Nifty IT will shave off around 15-20%. It's already topped out to me. Trump, no Trump, outside news, no outside news. Technically speaking, it's topped out for this year, and possibly another 10-15% is possible on the downside. So I would say that on a 37,000 index, you run a risk towards 32,300. So in those areas, if someone wants to look at IT, then possibly maybe yes, he has to again call back at that point in time, and we need to check that is 32, 33 holding or not. And if it is holding, then definitely we'll be able to give some picks there.
All right. Thanks for that view, Sarvendra. With that, Sunil is joining us on the phone line from Kolkata. Hi, Sunil. Good evening.
Yeah, good evening, ma'am.
Yes, how can we help you?
It's great to watch NDTV Profit. I would like to ask, what is the view of Adani Energy at current prices, considering its heavy order book, its smart metering business, and the QIP was oversubscribed 6 times at 1027, and currently it's hovering around 820.
Yeah.
So how do you look at this stock at 6 months or 1 year down the line?
Okay. So Sarvendra, coming to you, currently it's trading at 803. What's your outlook on Adani Energy? I hope this question is not that difficult for you to answer.
No, stock specific is always better. When you look at sectoral themes, then things you have to look at many things and not only the particular stock. So for Adani Energy, I would say that yes, you had a correction here. You had a decent correction, and and you have spent time now. And it was initially in 2022, it was a very sharp decline. I think the stock has still stabilized, and I would say that we are kind of holding these levels. So I think 720, 730 on an immediate basis, that becomes a good floor. From there, possibly you launch the next rally up. I would say that over the next 6-9 months, you could look in the targets of around 950, 1000. So that is what I would say in terms of the risk rewards. It looks good because you got stops which are very nearby, just below 720, and you're looking in targets another 200, 150 to 200 points of target. So around 1:2, 1:3 kind of risk rewards which are coming out here. So I think yes, if he wants, he can keep those levels in mind. He can keep the lower levels also in mind and the target levels also in mind.
All right. Thanks for that view on Adani Energy for short term, and it's a buy by Sarvendra. Now, Prashant, talking about the fundamentals of the company, are you positive, and should our investors, stay invested in it for long?
I think yes, again, with respect to the business model, very strong. There is some update in the BSE recently, 2 days back. There is a physical meeting and fundraising meeting in Sydney and Australia. So there's a lot of fundraising activity is going on in the company. So there can be some kind of near-term pressure in the stock, but overall, I'm also very positive with a target of at least 900, 950, very shorter period to medium-term target. So overall, hold for the stock.
Okay, so overall a positive view on Adani Energy, and viewers do note that NDTV is a subsidiary of AMG Media Network, the channel that you're currently watching. And let's go across to Venkat. He's calling us from Hyderabad. Hi Venkat, good evening.
Good evening, madam.
What's your question today, Venkat?
See, I have purchased 50 shares of Mankind at not one. So I would like to know what is the future. Shall I hold it or shall I exit?
Okay. And Venkat, your voice broke in between, so I'd like to confirm the price at which you bought these shares. 50 shares at 2,901 rupees a piece. Is that right?
Yes, madam, it is right.
Okay. And you want to know whether you should hold or sell in the long term or in the short term?
It is a long term for 1 year.
Long term perspective, 1 year. Okay. So sort of a medium term view. Got it. Venkat holds 50 shares of Mankind Pharma at 2,901 rupees a piece. The stock was almost flat in trade today, but Venkat is sitting on a loss of close to 25,000 rupees from this particular investment. Prashant, I'd like to take your view on Mankind Pharma. How do you suppose the journey is going to be for Mankind Pharma in the next 1 year?
Very positive, despite the pharma as a sector has some kind of concern, but Mankind has the larger part of business comes from the domestic business model. So I think that was the one reason why stock has been very much strong in the recent times. There was some correction, but the recovery was very fast. I think technically as well as fundamentally both very positive. Fundamentally, I think the stock can go back to its all-time high in next 6 months to 1 year at least. So my recommendation would be buy more, accumulate at this point of time and hold it for new highs.
All right. Thanks for that query. With that, we'll go to Prasanna. Prasanna's query from Chennai. So it's a WhatsApp query. He's bought 100 shares of RVNL at 458 a piece, and he's looking for a long-term view on it. So currently it's trading at 362 and was down in trade over 2% today. And Prasanna is sitting on a loss of almost 10,000 is what we can see on the screens right now. Talking about RVNL, Prashant, are you positive since it has also, gotten a Navratna status? So what do you have to say on the fundamentals of the company? Should, Prasanna stay invested in it for long term?
Yes, with respect to railway as a focus and railway infrastructure, I am very much positive on RVNL as well as IRFC. So So these two stocks are the major stocks which are going to support this infrastructure growth in the railway as a business. But with respect to valuation, obviously not so comfortable for him to buy more at this point of time. But I will advise him to hold at this point of time again. But what a good price would be anywhere between 330, 340. That can be a good level for him to add more and hold it for long term.
And Sarvendra, on the short term, do you suggest any caution there for RVNL, or are you optimistic on the counter?
I missed his buying price. Does the viewer tell his buying price also here?
Buying price was 458.
So I think he's already sitting on a decent cut here. I think see within the overall schemes of things, as I said for one earlier stock also, that whatever 30, 40, 50% corrections we were looking at stocks, possibly this one has done that. For the year, possibly it is done, but I think this will go, as I said, you will have to give it some more time to digest. So 3-6 months of sideways range bound move can be possible here. And after that, post that, I think once we break out on the upside, you will get higher targets. But at the moment, I think a broad range between a 330 to 380 types over the next 3-6 months on RVNL.
Okay, got it. And let's now talk to Nand Kishore. He is calling us from Bengaluru. Hi, Nand Kishore. Good evening.
Yeah, good evening. I'm looking for infrastructure 2-3 shares, small to mid cap to invest. Can you suggest which is the good stock?
Okay, Nand Kishore, just a quick word with you here. So even before, when we got 2 to 3 callers who were talking about, they were actually seeking some mid-cap and small-cap stocks to invest in. And our experts advised that perhaps if you want to enter the market at this given point of time, seeing the turbulent environment, large-cap stocks might be the right gateway to enter, or you should take an alternative route and invest in a mutual fund instead. So therefore, when I'm going to give you, I'll pose this question to our guests and I'll ask them to get you a large cap stock recommendation in the infrastructure space. Okay? Okay. So, Prashant, why don't you suggest Nand Kishore a good large cap company in the infrastructure space that could give him good returns in the long term?
When it comes to infrastructure, I think the only company would be L&T. So I think that would be one stock where there can be limited downside, but obviously the way how India is growing, the huge capex is going to come into India. So I think if you see recent order book, again, it is more than 5 lakh crores. So if you see that again, with respect to its sales, again, it is like 2 to 3x of its sales also. So overall, for me in infrastructure, if anybody would like to start large cap, L&T would be the best in class business model to invest in.
Okay, so L&T in infrastructure should be your pick, Nand Kishore. And with that, Prashant and Sarvendra, thank you so much for joining us this evening and answering all the queries of our viewers. And viewers, a quick note to you, do stay tuned to NDTV Profit and keep calling in on the numbers flashing on your screen. Ask Profit is here to answer all your stock related doubts. So tune in morning and evening, and we have a lot more lined up for you on the other side, only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
In the red, marking the end of a 7-session winning streak for the benchmark indices. The Nifty 50 index declines after sustained gains, with NTPC and Tech Mahindra emerging as the top laggards. Meanwhile, the Nifty Bank index extended its losses for the second consecutive session, reflecting broader caution among investors. India and the US begin their negotiations today to outline the terms of a bilateral trade agreement. Talks will continue over 3 days. A US delegation led by Assistant US Trade Representative Brendan Lynch will engage with India on key trade and tariff issues. S. Jaishankar, External Affairs Minister, once again expresses optimism regarding the enhancement of relations between India and the United States under the Trump administration, and also said that India is rebuilding ties with China. Equity-backed Indira IVF Hospital Limited temporarily withdraws plans for a 3,500 crore market debut over a Bollywood biopic on the company's founder. Sources say the company allegedly ran into trouble with SEBI over the timing of the movie Tumko Meri Kasam's release. Sources say global private equity firm KKR, the promoter of JB Chemicals and Pharmaceuticals, has launched a block deal with a base size of close to $200 million, seeking to dilute the part stake in the leading drug maker. The Supreme Court mandates the establishment of a grievance redressal mechanism across all states and union territories to address complaints regarding misleading advertisements. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets, but as well as national and international news. So let's get right into it, shall we? Let's take a look at what happened in the markets today. The Nifty and the Sensex ended sharply lower after a volatile trading session, marking Nifty's steepest decline in nearly a month. All sectoral indices closed in the red, with media, realty, oil and gas sectors leading the losses. My colleague Harsh providing us a comprehensive wrap-up of the day's market action.
Well, there's pressure on the Nifty evidently, and we've closed nearly 200 points lower versus yesterday, nearly 250 plus points lower from the day's high. So we saw a bit of a correction where the Nifty is concerned from the high. Second consecutive day where we've seen the fall, but first day in 8 where we've closed in the red. So that's one piece which we'll have to continue to monitor as the week unwinds. The other piece, and likely par for course, right? Now, where were the pockets of pressure? One, you had banks which were causing pressure on the Nifty 50. You had IT, and within IT in specific, Infosys was a big contributor to today's decline. And we also saw pressure from something like an NTPC. So those were some of the large contributors, negative contributors on the Nifty. The breadth on the Nifty was weak by the end, and we slipped further from where we were broadly in the day. So we've closed towards the day's lows. Let's talk about the breadth of the market. Not favorable. We saw 4:1 in favor of the declines, and therefore the breadth was sharply negative. You're also seeing the broader markets. The Nifty mid-cap outperformed by a wee bit, but the Nifty small-cap was down over 1.5% in trades. So some pain over there as well. In terms of sectors, we've spoken about them, but Nifty Auto in particular, Nifty Auto was in the green for a better part of the day, slipped and closed absolutely flat. And on a day like this, of course, we'll take flat, but given the fact that it was in the green for a predominant part of the day, it's closed in flat. The couple of gainers on the Nifty, something like an IndusInd stood out 3% higher. Trent was also the standout, up 2% odd. Outside of that, Hero and certain pockets which were in the green, but outside of that, nothing major within the Nifty really stood out. So broadly, it was a day where we've seen some bit of consolidation. Another day where there was a massive sideways movement of sorts when we were zooming out for the month of March. That's how I would put it.
Right, Harsh, thanks so much for that. Let's take a look at what's happening in the IPO landscape. What does a biopic have to do with an IPO, or even more interestingly, the SEBI? Tumko Meri Kasam, starring Anupam Kher and Esha Deol, was released last week. And while critics didn't like it too much, the Securities and Exchange Board of India didn't as well, probably prompting the withdrawal of a 3,500 crore IPO of a fertility clinic chain. To tell us more about the IPO, its withdrawal and how Bollywood might have contributed to it, my colleague Malika now joining in.
Lights, camera, and not action, but IPO delayed. Film reviewers may have passed this movie, but guess who caught hold of it? The Securities and Exchange Board of India, SEBI, the market watchdog. Let's go across to our first plate. I'm talking about Indira IVF withdrawing its IPO plans because SEBI had noticed a problem. The problem was with the timing of this movie's release, and the regulator's scrutiny on the movie timing may have triggered the company from withdrawing its IPO. Concerns largely lay around the indirect promotion at a time when offer details of this particular IPO were not disclosed to the public. And the massive number here is the worth of the IPO. The IPO was said to have been worth 3,500 crore rupees. But how exactly did SEBI connect the dots? Well, what we know so far is that the founder of Indira IVF, who is Ajay Murdia, the film was based on him. It was a biopic on the founder of Indira IVF, and the film was released just 1 month after the company filed for the IPO. Now, Tumko Meri Kasam credits Murdia's sons as producers of the film under Indira Entertainment banner. Now, the movie also stars Anupam Kher, Isha Deol, Ada Sharma and Ishwak Singh. But as I mentioned before, that this particular movie was released right after the company opted for a confidential IPO filing. Now, what is exactly a confidential IPO filing? Basically, it's an optional mechanism of filing for an IPO where a company does release a red herring prospectus, draft red herring prospectus, which is a document that entails important details of the company, but it is not disclosed publicly. It is only made public once the company decides for the IPO to go live. Now, other companies that have opted for this route before, which is the confidential IPO filing route before, include Physics Wala, Swiggy, Credila Financial and also Vishal Megamart. But overall, this is the story of how perhaps an IPO's plans was interrupted by the release of a movie.
Thanks, Malika, for that. And to share more insights on this, we have R.S. Luna joining in. Now, he's the former ED of SEBI and currently the managing partner at Alliance Law. Thank you so much for your time, sir. Good evening. I'm going to get right into it. Does this incident reflect a broader uncertainty in the IPO landscape in India, particularly regarding how external factors like media portrayals can impact regulatory decisions and market perceptions? And in your experience, is that something that's always considered? Have there been such cases in the past as well?
Well, I think we need to look at this regulatory action in the context in which this action has been taken. As is mentioned just now, that the filing was made under the confidential route, which is a new kind of route which has been given as an option to the issuer companies in 2002. So under that route, when you are going for the IPO and you are availing certain benefits, one of the conditions where it is that you will not go for any kind of marketing or advertisement of the intended issue. Now the question is that whether this movie can be viewed as marketing or advertisement of the intended issue. I think that is a very material question, and which probably one need to look at very carefully. Because if it is an advertisement or marketing of the product or services of the issuer company, then this restriction doesn't come into play. That is very clear in the existing regulations which are applicable to the companies going for normal route, not under the confidential route. So looking this issue from that angle, considering that the movie is an advertisement of the IPO or intended IPO, I think it might be a far-fetched situation, but I don't know all facts. I've not seen the movie, so I can't say if they're making any kind of marketing or advertisement for the issue as such. But if they're talking about only the product, which is IVF and all that, then probably, in my personal view, that should not fall within the ambit of the regulatory action.
So then do you think that Indira IVF's experience serves as a cautionary tale about the risks that are associated with confidential filing as an approach? Because what implications does this withdrawal of Indira IVF's IPO papers have on the company and the broader market?
No, I think this is an altogether different situation, that all people going for this confidential route and going for IPO may not be going for making the movies and all that. And so this is one of exceptional case itself. And so I don't think this is going to impact the other companies coming through this confidential route. Let's understand that this confidential route is basically meant for the new entrants, particularly in the field of startup companies. And they do not want to share their technology or the business operations with the people till they finally decide to go for this IPO. And they want to keep it as a secret. So I think this is a option or the route given to these startup companies based on the experience which regulator has taken from the Securities Exchange Commission of USA, that this kind of option is given to the issuer companies.
R.S. Luna, thank you so much for your time. This is how a biopic may have potentially stalled an IPO, as we saw Indira IVF pulling their IPO papers and withdrawing it right before they were about to go public. Thanks so much for that, sir. And moving on, India and the US are crucially negotiating to outline the terms of a bilateral trade agreement, also known as BTA, aiming to finalize the timelines for discussions over 3 days. A US delegation led by Assistant US Trade Representative Brendan Lynch will engage with Indian officials on key trade and tariff issues during these meetings.
The first set of official meetings between senior trade officials, both from India as well as the US, have begun here in New Delhi. This is marked by the visit of the Assistant US Trade Representative Brendan Lynch. He will be meeting with senior representatives from the Indian side, from the commerce industry, and the negotiations will be led by Additional Secretary Rajesh Agarwal. Now, what we're hearing, what will happen across the next 3 days is the fact that the initial contours of the bilateral trade agreement between India and the USA will be finalized. A schedule of negotiations will also be drawn up, and what we're also hearing is that the terms of reference, which is a basic idea and a basic structure of how the bilateral trade agreement between India and the US will look like. So these three things will be on top of the mind over the next 3 days as we'll have this US delegation come visit India. Now, what we're also hearing is that the formal negotiations for the bilateral trade agreement will also be chalked out in terms of what will be done when, in terms of when an Indian delegation will also possibly visit the US. And also what we're hearing is that the first tranche of this BTA, that will be negotiated in 2 tranches. The first tranche will cover basically tariff measures as well as certain non-tariff measures, while more sensitive topics like visas and technology transfers will be kept for a second tranche, which will be negotiated at a later point in time. What we're hearing is that the first tranche will be finalized by the fall of this year, which is between September as well as October. These are the 2 months that we are looking at in terms of the first tranche of the bilateral trade agreement. Now, we will stay tuned to this. These will be unfolding over the next 4 days till the 29th of March, which is when the US delegation is in India, and we will bring you more updates from that.
Now, at a recent summit, meanwhile, India's External Affairs Minister S. Jaishankar spoke about the evolving dynamics between India, the US and China. He highlighted a fundamental shift in the US's approach to global affairs, also driven by China. He emphasized that if the US changes the way it engages with the world, the global landscape will never be the same again, and pointed to a renewed sense of politics and a shifting American view of globalization, both influenced by China. Let's listen in.
If the United States starts to change its terms of dealing with the world, its approach to dealing with the world, it's almost, it's not almost, it is actually the foundation of the order which is shifting. Now, I use the term churn myself, so I compliment your team for picking.
We take it from you.
For this, because the word churn kind of signifies that you're going deep down. Yes. That it's not something on a surface. Exactly. It's not something which is going to come, go, and we'll carry on. I think the world will never be the same again.
Exactly.
So there is something very deep, very profound, very consequential which is happening right now. And yes, again, I think there are many other events and trends which have fed into it. You referred to the conflict, the Russia-Ukraine conflict. I would still argue that the shift in the American position is a much more fundamental happening than the conflict, than the Russia-Ukraine conflict, however serious that is. There is another trend which precedes that, which is, I would say, the rise of China, because in many ways, I think that has driven or fed into the shift in American attitudes.
Yes.
There is a renewed, sharper sense of geopolitics. I think the changed American view of globalization has a lot to do with the rise of China.
Now, the Bank of America has downgraded shares of India's leading food delivery platforms, Zomato and Swiggy, citing concerns about their near-term growth prospects amid rising competition and increasing losses in the quick commerce segment. The downgrades have led to a notable decline in share prices, with Zomato and Swiggy experiencing drops of up to 3% in trading sessions following the announcement.
Bank of America has downgraded Zomato to neutral from a buy rating, has cut target price to 250 from 300. Swiggy, they have downgraded to underperform from buy and cut target price to 325 from 420. Now, there are a couple of reasons as to why they have done this. First one being that they're saying that the quick commerce overall picture, there has been prolonged competition and they are expecting higher losses going forward because of the dark store addition overall. In terms of medium-term prospect, they remain positive, but overall picture in terms of competition is getting tougher. Food, they're not, in the food delivery space, they're not seeing any material slowdown, but overall cash flow is set to sink is what they're expecting. And lastly, in terms of changing narrative in a risk-aver market overall right now, they are cutting their overall earnings estimates as well for both of these counters, and these are the reasons, the specific reasons as to why they have downgraded both Zomato as well as Swiggy.
Now, the Delhi government has introduced a new directive aimed at increasing transparency in private schools. Schools are now required to clearly display details about prescribed books, educational materials, and other essential items. Now, this information must be prominently showcased on notice boards and official websites, ensuring that students and parents are aware of the availability of these items across multiple locations. Addressing the media, Education Minister Ashish Sood emphasized the government's commitment to addressing this issue and ensuring compliance with the new rules. This step is part of broader efforts to make education more accessible and reduce undue burdens on parents.
EWS कैटेगरी के एडमिशन्स चल रहे हैं, साथ ही साथ अन्य बच्चों को भी दाखिला लेना पड़ता है। नए एकेडमिक सेशन में जब वो दाखिला होता है तो उसमें बहुत सारे बच्चों की शिकायत ये आ रही है, उनके माता पिता की शिकायत ये आ रही है कि उन्हें कंपेल किया जाता है कि वे स्कूल से पूरा सेट किताबों का खरीदें, पूरा स्टेशनरी का सेट खरीदें, स्कूल से ही खरीदें, यूनिफॉर्म स्कूल से खरीदें, न खरीदने पर उनको प्रताड़ित किया जाता है और जब वो खरीदने जाते हैं तो बाजार से दुगने तिगने दाम पर उसके पैसे लगते हैं। हमारे पास EWS कैटेगरी के बच्चों की शिकायत आई है, उनके अभिभावकों की शिकायत आई है, जिनके लिए यूनिफॉर्म निशुल्क, उनके लिए स्टेशनरी निशुल्क दिल्ली की सरकार देती है EWS के बच्चों के लिए। तो हमने इस बात की हिदायत जारी की है कि EWS कैटेगरी के बच्चों से कोई स्टेशनरी और यूनिफॉर्म के लिए चार्जेस न लिए जाएं।
And moving on to some news coming in from Kerala, the Chief Secretary Sarada Muralidharan has sparked a critical dialogue on entrenched colorism and gender bias through a very personal Facebook post. She recounted a discriminatory remark comparing her tenure as Chief Secretary to that of her predecessor and husband V. Venu, stating, "It is as black as my husband's was white." The comment highlighted societal prejudice against darker skin tones, which Muralidharan chose to address publicly. She initially deleted the post after being overwhelmed by the responses, but later reposted it, stating that the issue deserved attention.
I would say that what led to my writing the post was not really very relevant. It was just a comment that was made. It was a comment that was made perhaps from a sense of or from a position of humor. But the thing is, behind the humor, there is a entire value connotation, and that value connotation is that the kind of administration that I do is black, and the connotation is that because it is black, it is not good. That there was something wrong with it. And I thought, the reason that you brought that black in is because my skin is dark, on the one hand, and then it goes beyond that to imply that that blackness is not good quality.
And a quick update coming in. If you've had issues making UPI payments in the past hour, you are not the only one. Now, we have detected failures, and data now is suggesting that there have been over 3,000 complaints on UPI payments since 6 p.m. this evening. The payments are facing unexpected technical issues, and customers are complaining of payments not going through at all. So if you are somebody that's facing these payment issues, you're not alone. This has been happening since 6 o'clock in the evening. And now let's take a look at some of our other stories that are making news around India. GE Aerospace has delivered the first of 99 F404 engines to Hindustan Aeronautics Limited for the Tejas fighter jet, marking a significant milestone in their 40-year partnership. This engine is customized for the Indian Air Force and offers the highest thrust in its class. The Reserve Bank of India announced the Monetary Policy Committee meeting schedule for the next fiscal year starting April 2025. The rate-setting panel is set to have 6 meetings, with the first one scheduled for April 7th to 9th, 2025. The last MPC meeting was last held in February 2025 under the leadership of new RBI boss Sanjay Malhotra, where India for the first time slashed its repo rate by quarter points to 6.25%. The DGCA has exempted airlines from the requirement to share detailed fare data, allowing them to submit only aggregate airfare information instead. This decision follows concerns raised by India's largest private airlines, represented by the Federation of Indian Airlines, which includes Indigo, Air India and SpiceJet. These airlines had expressed worries about sharing ticket-wise airfare data from the past 2 years, citing risks to confidentiality and competitiveness. SpiceJet announced the launch of 24 new domestic flights as part of its summer 2025 schedule. The airline is expanding its network by adding 3 new destinations, Tuticorin, Porbandar and Dehradun, while introducing new routes to enhance connectivity across the country. The airline will commence operations on these new routes in a phased manner from 30th March 2025, with bookings now open. The Supreme Court of India has recently mandated the establishment of grievance redressal mechanisms across all states and union territories to address complaints regarding misleading advertisements. The directive was issued today during a hearing concerning the implications of deceptive advertisement practices, particularly those that could cause significant harm to society. Mumbai's Khar police station has issued a second summons to comedian Kunal Kamra in connection with his controversial remarks targeting Maharashtra Deputy Chief Minister Eknath Shinde. Kamra was initially asked to appear at 11 a.m. yesterday, but he failed to comply, citing work commitments outside of Mumbai and requesting a week's extension. The police rejected his request and insisted on his immediate appearance. The Supreme Court has stayed the Allahabad High Court's controversial ruling that grabbing breasts does not amount to rape or attempted rape. Supreme Court justices have called the High Court order completely insensitive and have criticized the deliberate reasoning behind the decision, which downgraded the charges to aggravated sexual assault instead of rape under IPC and the POCSO law. And that's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching KYC, Know Your Company. We're going to today speak about WebOff Global. We'll try and break the company down, try and see how it's performed maybe over the last 3 to 4 years. And first off, we'll start off by understanding what it does. Very unique business in that sense. What it essentially does is it manufactures jewelry. It started at least with that. It started with jewelry. Now it has diversified even into lifestyle products. Lifestyle products meaning your regular home care products from bed sheets to towels. But let me first start off with the key starting point, which is jewelry. They actually had they're more like an e-tailer of jewelry, right? And a lot of it being artificial. They target the value conscious customer in the West. So whether it's US, whether it's now Europe, UK, largely US and UK is where they have a significant presence. They're now diversifying into Europe. What they do is they push ads through TV channels, and like your typical Naptol model in India, they try and sell their products in US and the UK to the value conscious buyer. And there aren't just a few, there are 7 lakh unique customers that they have in some of these geographies. US and UK in particular. Now they are growing in Europe as well and growing their presence fast in Europe. They've re-entered the Germany market in 2021. That's why you'll see some numbers starting to get impacted from 2022, 2023. And now even in first half of 2020, rather FY24, but even in first half of FY25, we've seen a bit of an impact on the numbers. Q3 is when we've started to see an unwind. It's an omni-channel e-tailer of fashion jewelry, accessories and lifestyle products. Omni-channel meaning that they not only deal with online shopping, but also offline. They sell their products through a single channel, which is manufactured by them. So it's a fully integrated supply chain, all within Web of Global. Even brands are within Web of Global. So it's vertically integrated, and fashion jewelry and lifestyle products is largely what they focus on. Fashion jewelry, which was 70% a couple of years back, currently sits at 66%. Lifestyle products, the mix is increasing. It's an end-to-end B2C model. So from raw materials to manufacturing to selling and including marketing and customer service, all is dealt with within the company itself. There are proprietary TV channels and digital platforms that they sell through. All of the products that they sell are sold through single source, manufactured by them. So that's one of the big positives. 7 manufacturing units is what they have across India as well as China. And largely the factory at Jaipur is large, 169,000 square feet is what the factory size is. In terms of capacity, 5 million pieces per annum is what they can manufacture. In terms of SKUs, they have a very solid number in terms of unique products that they are able to sell. They have around 25,000 SKUs, including 5,000 unique SKUs in the lifestyle category. And they generate around 28,500 plus new product ideas annually. And there are over nearly 5,000 ideators and 14 to 15,000 new jewelry designs that are brought out on an annual basis. So those are some of the growth levers which will likely play out. They have 31 in-house brands. The largest ones are these. Those are just some of them. Of course, they don't cater to the Indian market. Therefore, you and me don't hear these brands on a daily basis. Very niche, value conscious customer in the West is what they deal with. But we're going to speak with the management later on this show. We are going to be speaking with Nitin Panwad, who's the group CFO of Web of Global. But more importantly, how do we analyze this one? So what are the metrics we look at? We'll look at it typically like a retailer. We'll start off with income statement, balance sheet and cash flow. We'll try and zoom in on how those have played out. We'll look at return ratios as well, long term as well as short term. And we'll look at shareholding, street cred, valuation and street coverage we'll combine because street coverage is limited. And then we'll speak about what the outlook and the guidance is at the end of Q3. And we'll go and we'll speak with the CFO of the company as well. Joining me today, Mahima Vajrajani, to talk to us about exactly this, try and break this one down and help me do that. So thanks, Mahima, for joining. Start off with the income statement.
Right. So, I'll start off with the 4 numbers that we always concentrate on. That is your revenue, EBITDA, margins, as well as your profit numbers. In terms of revenue, there has been a 3-year CAGR of 11%. But as we were discussing earlier as well, it has been a steady 11% CAGR for the counter. For EBITDA and net profit, the 3-year CAGR is negative. For EBITDA, it is around minus 10% and net profit is around minus 22%. But this is because they have been expanding in European markets as well as overall focusing on Germany as well, which is why there has been a slight degrowth where EBITDA as well as net profit is concerned. Margins have improved as compared to FY24, where it stood at 9.7, which is improved to 11.5 in 9 months FY25. So overall an improving trend in terms of revenue, but EBITDA and net profit slight degrowth because of expansion plans, which is why overall we've given a neutral rating right now, because management has also guided that FY26 is when overall impact of Germany's expansion will have on bottom line. That's when Germany turns positive and will have an overall impact on the net profit numbers as well. In terms of how revenue is divided for Vaibhav Global, where in terms of revenues by format, right now 60% revenue comes from TV and 40% comes from digital. They are focusing on digital and want to expand overall their digital presence. Revenue by product, well, 66% comes from jewelry and 34% comes from lifestyle. In terms of geography, US contributes 59%, UK contributes 29%, and Europe contributes around 12% right now. Now, in terms of how overall divisional performance has panned out in terms of TV division, TV revenue stood at 1,444 in 9 months FY25, which is improved as compared to 9 months FY24. Sales volume has also improved. In terms of average selling price, that has gone down by a tad bit, which stood at around $39.1 versus that of $38.3 in 9 months FY25. For digital, revenues again have improved here from 840 to 964 crores. Sales volumes have also improved and average selling price has also improved where digital presence is concerned. It stood at around $30.2 versus that of $31.6 in 9 months FY25. Lastly, B2B division, the revenue stood at 122 crores in 9 months FY25, which has improved from 96 crores in 9 months FY24. So overall, even in terms of divisional sales, there has been an improving trend. Because there is a slight degrowth in EBITDA and net profit, we have given it a neutral right now, taking a conservative approach, and this is the overall view as to how income statement pans out for Vaibhav Global.
Yeah, absolutely. So Mahima, thank you for that. It's a fairly detailed breakdown. Couple of things that I want to add to this. The company does nearly 60+% in gross margins. For a retailer to be able to do that, it's commendable. So that's the first piece. A lot of the expenses are on the marketing side, and because they've opened Europe, therefore margins are slightly stretched, if I can call it, over the last couple of years. How those margins unwind is going to hold the key. That's the EBITDA margin. The gross margin doing fairly well. But let's quickly go across to the balance sheet, and I'm not going to take too much time here. Looking at net worth, FY24 versus 25, you've seen an expansion in H1. Debt, they're a zero debt company. That's the one big positive that you're seeing. There's very limited risk that a company has when debt is zero. Lease liabilities, okay, there are some, but cash balances are more than enough to offset lease liabilities. And what we've noticed is company regularly maintains a decent amount of cash on its books, which is always healthy. So therefore a clear thumbs up. Cash flow, Mahima.
Right. So cash flow, the net cash, overall cash flow from operations has declined a tad bit in first half of FY25. But overall, we'll have to wait and watch out for as to how FY25 overall pans out, because they might have put in some money in acquisitions or in expansions in European as well as US markets. And overall, you know, as you rightly mentioned, they're putting in money for advertisements as well as marketing spends are going up. So that might also have an impact on overall net cash flow position. But in terms of the net cash flow position overall has improved as compared to FY24 as well as first half of FY24, because that was a negative number which has turned positive to 8 crores in first half of FY25, which is why overall we've given it a neutral rating for now.
Perfect. Let's talk about return ratios. Again, a neutral on this count, because what we've seen is return ratios were elevated for the better part of pre-2023. Thereafter, we've seen return ratios fall. It's because of their European expansion to a certain extent. It's because of acquisitions also to a certain extent. Now, you would hope that as margins start to recover, return ratios also start to normalize. So we'll have to wait and watch for this metric. But otherwise, historically, it's been a high ROCE business and high ROE business, as you can see. There's been a bit of a dent, but you could well see this bounce back. And if it were to go to 31 or even 20 plus levels on the ROE count, you could well turn this into a thumbs up very quickly. So it's a wait and watch, a neutral for that reason.
Absolutely. The next parameter that we're tracking is shareholding, where in terms of how shareholding has panned out as compared to how it was in March 2022 versus how it is right now as of December 2024. Promoters have slightly diluted their stake from 58% to 57%. FIs have increased their stake from 10% to 18%. DIs, however, have decreased their stake significantly. They're now holding only 0.7% versus that of 18.5% which they were holding in March 22. And public shareholding has significantly gone up from 12.6% to almost 23.5%. But it's also important to mention here that there are some marquee investors who have invested in this particular company, that is Vaibhav Global. There's Nalanda India Fund, which is holding around 7.6% stake in the counter. There's Malabar India Fund, which is holding around 5.7% stake. And Vijay Kedia is also holding 2% stake in the counter. We have given this a neutral rating only because DI holding has overall gone down quite significantly, and we've taken a conservative approach here, but we've seen good marquee investors that have already invested in the company. That shows their confidence in the company as well.
I want to quickly mark out one piece here. The DI number of 18.5% was in March of 2022 included a 10% stake of Nalanda. Now Nalanda has converted itself into an FII, and therefore that 10% stake has actually come here. It's gone down a little bit. Nalanda has sold off around 2 to 2.5% stake, and therefore that 2.5% delta versus March of 2022, but that's the one big addition. So that's one. Second, on the shareholding side, I see very, very interesting dynamics. One is you have a Vijay Kedia, which you correctly said. There's also an Ashish Kacholia, which owns 1.2% of the company. And of course, public shareholding has definitely gone up as a result of some of these marquee investors coming in and buying a stake. So that's how it's playing out. It's neutral only on the count that you're seeing outside of this 10% ownership of Nalanda, 8.5% has been sold by DIIs. Largely Motilal Oswal Mutual Fund to some extent has sold out, and therefore maybe a bit of a neutral, maybe some overhang there, and you're also seeing Nalanda slowly sell, and that's why the neutral on the counter on this metric that we're giving. But otherwise it's very interesting, the shareholding on this one, Mahima. Let me though go ahead with regard to street cred. Well, not doing well from a street cred perspective, very frankly. The 6-month chart, stock is down 25%. When you're looking at the 1-year chart, it's down 38% in the last year, and the 5 years, it's down, it's up 58% only. So 5-year returns not too impressive. The question only is, is all the negatives really built in? But the way we are looking at the way street cred has played out, it's definitely a thumbs down. Valuations. Right.
So in terms of valuations, there's no direct peer for Vaibhav Global. So we don't have a peer-to-peer comparison here. But if you see the Bloomberg PE estimates for Vaibhav Global itself, the trailing 12-month PE stands at 29 times, which is not cheap for a retailer. And going forward also, the slide in PE comes to around 22 times in 2025 and comes to 14 times in 2026. 14 times, the slide from 29 times to 14 times is quite steep. But right now the valuation is not looking cheap, which is why we've given it a neutral rating. And overall, in terms of analyst recommendations as well, there are not a lot of analysts tracking this counter. It's just one analyst which is actually tracking it and has given a buy rating. And the return potential as per Bloomberg is 189%. But since it's just one analyst tracking it, we've given it a neutral rating, taking a conservative approach again here. So that's with respect to valuations and analyst recommendation. But what's the outlook like?
Why do you cover outlook?
All right. So in terms of outlook, we went to the con call and we saw that the management has given a revenue guidance of around 12%. This revenue guidance, however, has been cut down from 14 to 17% to around 12%. And this is because of performance in US and UK, and the consumer environment is right now muted there. Early teens revenue growth in FY26, and they remain cautious with respect to the macroeconomic trends, confident in sustaining profitable growth. And last lastly, they plan to enhance profitability through supply chain as well as adding new subscription box launches. So this is the overall outlook so far that the management has given for the company, Harsh.
Yeah, outlook definitely looking positive. But you know what? I'm not going to waste any more time. Very quickly on to a summary of the metrics. It gives us a 4.5 on 8 with regard to parameters, income statement, balance sheet, cash flow, return ratios, and thereafter we look at shareholding, street cred, valuation, street coverage, and outlook. That's broadly the way in which it's played out. 4.5 on 8 is our rating. Let's go across to the management. We spoke with them earlier today. Mahima was able to speak with the group CFO, Nitin Panwad. Listen in to what he had to say.
On the tariff terms, like global landscape is fluid at the moment with the multiple trade wars and the political changes happening. The tariff is now new thing which Trump administration has announced. And on the 2nd of April that he may impose some tariff on the multiple countries. But the multiple research report available in JP Morgan and other research reporters said that the maximum impact would be on Mexico, Canada, and China. However, India would be untouched upon it. But the vertical integrated supply chain model we not only operate in India, but also we have a sourcing in 30 different countries across the world, which establish us in a much better position to diverse our risk to mitigate all the tariff if they implement from 2nd of April. However, there will be definitely impact. We cannot say that it will not be impacted, but we operate with the lower cost of goods sold compared to other retailer, which will be compared to them the duty impact on us, which will be lower than that. And it will not only for us, the duty impact will be across all the retailers. So comparing them, we have a two advantage of diversify our risk to the multiple sourcing countries we have, and also that we have a lower cost of goods sold. So comparatively, we have a lower impact on tariff.
Got it. Lower impact of tariff on Vivo Global is the takeaway from that particular question. Now, in terms of lab-grown diamonds, there has been a surge of demand where lab-grown diamonds is concerned, especially in the US and the UK. And as of the last quarter, we saw that around 9% of your overall revenues is now from lab-grown diamonds. I just want to understand as to what are the key trends that you're observing where lab-grown diamond sales are concerned, and what's the outlook like? Where will this 9% number go to? And overall, how will that impact your margins as well as top line?
Sure. Yeah, so in past 9 months to 12 months, the lab-grown demand is increasing quite a lot. And we have seen that customer is asking more for lab-grown, it is more affordable than the natural diamond. The pricing is 1/10 or even lower than the natural diamond, and we see continued good response. The two advantages that we have for the lab-grown, one is the customer demand and velocity is quite high when we sell the product on air on the social media, and also that we have a higher gross margins on the lab-grown product as we have sourcing in multiple countries the lab-grown product. And also that we have seen over the time period, we have a lower sales return also for the lab-grown products. So we continue to see that product share is increased from 3% in Q1 to 9% in Q3. And we expected that it will hit the double-digit share in near term in lab-grown products. So it will continue to expand the near term the lab-grown product. As we have seen, the customer acceptance and velocity is quite high, and we believe that the share of the lab-grown product will reach to double-digit near term.
Okay, and with respect to your Germany business, overall in Q3 there was a robust 30% revenue growth, and you also in your con call said that you are expecting positive momentum in Q4 as well. In terms of contributing towards the bottom line, do you expect Germany will start contributing towards the bottom line in FY26?
Yeah, so FY25 Q3 we have breakthrough with Germany. And now it will start contributing in terms of more profitability in upcoming quarters. Germany not only contribute in terms of the operating margin, but also contributed in the lower tax rate as the carry forward losses is pretty high in Germany. So the once the profit will generate, so the effective tax rate will also reduce for the company and continue to be expecting, even with the recessionary environment in Germany, we are continuously growing as a past quarter 30% growth. And we expect that will continue to grow and generate more market share and more market margins from Germany operation.
Got it. And in terms of your US and UK business, because when I went through your con calls, I saw that Q2 you had given a guidance, revenue guidance of a growth of around 14 to 17%, which you actually lowered to 12% in Q3, and this was because of muted consumer sentiment in the US and UK. I just want to understand as to how things are looking like now in US and UK, and in terms of demand where consumer sentiment is concerned, and going forward, do you expect that to improve in FY26?
Yeah, so consumer demand is still muted, and especially with this tariff and the multiple trade war situation, the customer is still cautious of the discretionary spending. However, customer is spending on the investment item. We see the values kind of like a gold or the other high-end items where they perceive some value, but the discretionary demand is muted. And our value proposition, our model is value proposition. We offer quite a lot of the discretionary products, but the ability and agility we have to move the products where the demand lies. So we moved in past years our product more on the gold items and more on the higher price point items where they perceive some value. But we still see the economy in US and UK, both are muted, especially in Europe and UK. We are seeing the impact of the cost of living crisis over there. So that is why we have trimmed our guidance for the upcoming quarters.
Okay, so out of time on this edition of KYC with that conversation. We hope you found this insightful and helpful. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all